Welcome back to another episode of the Lofty Lenders. Today we are talking about another homebuyer education episode where Charlie and I will explore tips, tricks, and stories that help you to plan for your next home purchase, whether you're a first-time buyer, a move-up buyer, an investor, or you're just looking to learn. We hope you gather something that's of importance today. And today we are talking about student loans. How exciting, Charlie!
Woohoo! Nobody likes
So
to talk about student loans, but hey, it's
why
good information.
why should we talk about student loans? Student loans don't matter with your house purchase, right? Like we don't need those, right?
No, it's like credit cards. It's not real money.
Yeah, I mean,
It's
I took a lot of student loans out. I got to go to school. I need to, I think I need to pay that back. They've been telling me I need to pay it back, but I really want to buy a house. And buying a house is it's important. So I should probably buy a house instead of paying my student loans, right?
well, I mean, it's I look at it like when you get the student loans and when you look to get that first house, no one explains it correctly to you. So you just go into it somewhat blindly and then maybe kick yourself later. So unfortunately, with student loans, we're always dealing with what has happened and just where it's at. So the education piece, because no, Kyle, you have to pay your student loans. You can't, like any debt, you can't not pay and then ask for more money. It doesn't work.
And
Well, you can. It doesn't work well.
to that point, you have to pay your student loans. So one thing that we've seen a million times over is somebody saying, well, I filed for bankruptcy and all my credit cards and my house and all that stuff was included in that. And it's amazing because
It's your
even though
student
you try to
loans.
include your student loans, it never happens. You
No, when the
mentioned
federal government gives you money, they're not going to let you just wipe it out.
and you mentioned something about not really understanding the student loans you took out. My wife took out student loans when she was in school, and she was not aware that she would have made a $50 monthly payment. She would have kept the interest off completely, and so
Yeah.
she got out of school, and that interest had compounded, and her student loans were way bigger than what she thought. And she looked at her dad, and he goes, well, I guess I didn't realize that we applied for that one. I thought we were applying for the one that was no interest accruing. And I was like, oh man, that just put us behind the eight ball even more.
And that's the hard part. I mean, nobody really wants to pay debt off. So when you get the opportunity to not pay and have that deferment, it sounds good, but honestly, it's like anything. Just do it. Do it right now and take the minimum payments you can get, at least your, like you said, you're not compounding and having that balance go up because the interest keeps tacking on. It's no fun, but the sooner you start doing it, the better.
So can somebody qualify for a house then, Charlie, with student loan debt?
100%. Honestly, I don't think you can speak to this too, but I don't think I've had but maybe one or two that we had to say we just can't get you into a house because of your student loan debt. It's not very common. I think the couple I had were very extensive throughout school degrees. We're not talking undergrad, we're talking grad and probably doctorate from the two I'm thinking. And then they basically got a job at Walmart. I'm like, well, you can't have a doctorate student loan tab and work at Walmart and make the numbers work. I mean, everybody can have a fine job, but if you got that much debt, that could be tricky. So, 100%, you can totally buy a house with student loan debt.
Yeah, I have a buddy who's he's a magistrate now, and he came out of college and he goes, well, I already have a mortgage of student loan debt and I don't own a house. How's that going to work out? And I'm taking a job where I gotta, as an attorney, I'm starting out not really making a whole lot, and I'm just trying to bust my butt here. So hopefully, I can someday pay down all that debt. But now he owns a house. He's paid off all his debt, and he's doing really well. So obviously, there's a way to get that done. But how do lenders view those student loans in the debt ratio?
Darn good question because it's slightly different everywhere. And I think this is the hard part we always have difficulty explaining to people. So, asking the questions early, but for the most part, general answer is you need to take a standard percentage, anywhere between a half and 1% is what you're going to see as the minimum payment. So whatever that balance is, 1% is the easy answer, half percent is the better answer, but it's really not that much. And from what we've seen, it's very, very manageable, better than credit cards and better than auto loans. Normally it's the credit card and it's the auto loans that make more of a challenge.
And so I think one thing that I really like about the different ways that all the different programs account for the student loan debt is they have different calculations. So if you have $10,000 in student debt, for example, on a Fannie Mae product, they're going to account for that 1%, which is that easy math Charlie just mentioned. And you're paying $100 on $10,000. However, if we go Freddie Mac, which might make sense for your situation, we only have to use $50. There's the half
Yeah.
percent. FHA, they follow that same half percent rule. USDA, same thing. And then when we get to VA, you veterans, I love the VA calc for whatever reason. They just find a way to make things even better.
Yeah.
And I can't do the math right off the top of my head, but I do know that the VA takes your total balance, that $10,000 times 5%, so $500, and then divides that by 12 months and says that you need to make that payment over the course of the 12 months. So it's less than $50
About
a month.
$45.
Right there.
Yeah. So the VA just gives a little bit of a perk, which is nice. I mean, the vets, one, thanks for your service, everybody. And you've
Yeah,
got
thank you.
that nice benefit to apply. So it's a hell of a deal. The VA really wants to see veterans be safe and sound, but they want to see them get into a home. So yeah, great example, Kyle.
So then what if your loans are in deferment, Charlie? Do you still have to have that payment? Or I guess, is there any other ways that we account for that if it is in deferment?
That's the part that's kind of a tricky piece. 'Cause, I mean, we advise some people, like you had mentioned with your wife's loans, if you would have just set those little payments up, you could avoid the balances going up so much. But yes, for lending, we still have to count a payment because you're not going to be deferred forever. It would theoretically be nice, but then the debt never goes away. So that's where that half percent and 1% somewhere in there is going to have to come into play. But again, if we can help with the budget, sometimes we can get you on the income-based repayment, which then is not a lending calculation. That's the student loan calculation. That could be even less. And then you're just at least making something, which can also help your credit because they're active accounts versus kind of quiet dormant accounts.
Yeah, I know that I've seen many people come in with several student loans out there, and their income-based repayment plan is $1 on each of their loans, and so they've got 5 different
Yeah.
student loans, and we have $5 to account for. So it's a whole lot nicer than the $500 we should have accounted for. So we account for $5, and now you qualify for a lot more house because you're only required to pay those $5. Obviously, interest is accruing faster than that dollar per loan. So we always recommend you pay extra because you're never going to get ahead. It's only going to continue to get worse. But on the flip side, if we only have to account for that, let's do that. So
And it's a fair calc. I mean, underwriting is just looking to make sure that you're safe and sound. They want to make sure that when those student loans do kick in, that you're still going to have an okay time, even though you're not going to like paying more. You're still going to be fine with your house, your car, whatever else you have for debt, and you're not going to be strapped. So it's a fair calc. It's just understanding what your situation is, which can be different from person to person.
And I also want to point out too, you mentioned, for example, with my wife, with her situation, had she been making minimum like $50 monthly payments, if she just decided to make those because she wanted to get rid of her interest that it was accruing, but she wasn't required to, if she had never contacted them and she just started making those payments, it would not have shown $50 a month as her minimum payment. It still would have shown 0. And had she applied for a mortgage with that, even though she was making payments on them, because the requirement is 0, we would have had to have used the 1% or the 0.5%. So it's important to note that just because you might be making payments, you're trying to get this thing paid off because maybe there isn't any interest. And well, Kyle, I've always been paying $50 a month. Unfortunately, if you don't have that agreement with them, then it doesn't matter. And the other point I wanted to bring up is Charlie mentioned, that deferment. The policy says if we can prove that your loan is deferred for more than, I think it's 5 years.
5 years easy,
Then-
sometimes even 3.
Yeah, then we don't have to account for it. I have never seen anything longer than, and sometimes it's only 12 months, but I've never even seen 12 months because if you apply for it today, it's good for the next 12 months. But tomorrow, when we look at that letter again, it's now no longer 12 months and we have to account for it again.
Yeah, the odds are you're not going to prove it's deferred for any longer because if your situation changes, they want to leave it open to where you make more money. Congratulations. Please start paying us.
Do you have a story of anybody who reduced their student loan debt because they got on that income based or even just were able to afford more house?
It's a lot of fun. I mean, that one is a silly one that people don't like those phone calls, but when we suggest it, I would say a 50-50. Some of them, they just don't have a good customer service rep, but I think I've had good luck with people calling in, and you might have to call a couple times, get somebody who's friendly and helpful, but just do the income-based calculation. We've had a few that come back at that dollar, $5, $10 a month, and it really makes the overall debts for our underwriting side so much easier because, like you said, you could have had a $50, $100 payment, and we're only having to count 10 because it does report to credit. But I really like that it activates because a dormant account doesn't really help your credit score. And a lot of people, you do a good job not having too many debts, but you don't have as much good information showing for credit. Man, you kick on those 3, 4, 5, 20 student loans, whatever you've got. It's a lot of good credit every month by making those on-time payments. So it can really help scores. Good little trick.
And I think one of the things that a lot of people have heard over the last couple of years is a little bit about the previous administration approving nearly $190 billion in student debt cancellation. I know it gets annoying for us to hear as lenders because everybody comes to us and says, "Well, Charlie, the government's just going to forgive my student loans," and while
Just
that's
throwing it out there.
and while that is possible, we've never told anybody to wait for that because unfortunately the government makes a lot of declarations and things that they're expecting. And now it's the previous administration. The current administration is doing everything completely backwards from what the last one was doing. And it's not necessarily meaning that they're not going to have any forgiveness, but that's definitely doesn't seem like it's been anything on the table at this point.
It's not the focus. Yeah.
But in doing that, they did, remove a lot of debt that was out there. They increased the credit scores for a lot of people, and they made homes a little more affordable for those people that were just inundated in student loan debt. So there definitely are some people that truly benefited from that, and maybe they're sitting out there listening to this right now thinking, hey, I can finally afford a home. That's great. Let's chat. Let's go through that. Because even though it's 5 million borrowers, it really wasn't that many people. So hopefully you got a lot of money taken off because I didn't get a dime.
Well, and me neither. But it goes right into our normal talk track that everybody wants to wait for the right thing to happen and then buy a house. And it's like if the budget fits, the sooner you can buy it, the better because you have that appreciation. If you don't own the house, you don't get the appreciation the landlord does or whoever else that you're paying to.
Yep. So I think a couple of actionable takeaways here today. Understanding your debt ratio. One of the biggest things that we didn't necessarily hit on it exactly with those words, but understanding what your monthly payment is on your student loans, plus your car loan, plus your credit cards, plus everything else you have out there, and how that ties in with your mortgage and all your debts versus your gross income. That's a whole other topic for another day, and understanding what a DTI is and how that works. But understanding that we go off of gross is a big deal. A lot of people come to us and say, well, I bring home $900 a month or a week. Well, $900 a week is great, but that's your net. That's not your gross. And we need to understand your gross, even though you don't bring that home. And I totally understand. It doesn't make a ton of sense to base everything off of, before you have your deductions take out. But understanding what your debt's income is, and we can certainly help you explore that, being the first one. The second one being exploring repayment options, as Charlie's mentioned a couple times now, understanding which opportunities are out there. And, another thing is just consolidation of that student loan debt. I had somebody reach out to me, say, hey, I want to help my girlfriend by refinancing my mortgage and paying off her student debt. And I said, well, let's understand why this is. Why are you wanting to pay those off? Well, her interest rates are 12%. 12%, man, I can hop online and I can find 30 different lenders that can refinance that debt for way less than 12%. You have about $5,000 worth of equity. You don't have enough money to refinance and pay off her debt. Let's just look at refinancing, and maybe that's improving your repayment plan alone right there. So, and then finally talking to a
good sounding board. I mean, a lot of this is complicated and you just get overwhelmed. You just need a good sounding board and get somebody to encourage, and we can help you lead in the right direction so you're not just spinning your wheels.
Anything else that I missed today?
No, the DTI or the debt to income ratio, that's another day, but that is a big one. So many people get overwhelmed with that. It's not as bad as you think. But yeah, we'll cover that in another episode.
Hey, stay tuned for next week. Let's throw that in there next. Maybe we'll find a way to put a whiteboard on here. I'm not sure how to do that with this technology, but let's see if we can figure that out. Otherwise, we hope you enjoyed the conversation today and found it valuable. And be sure to follow us on all social media platforms. LinkedIn, Facebook, Instagram, YouTube. I'm out. The Lofty Lender is out there everywhere. And check out our new YouTube page. It's nice and pretty. I really worked hard on that, and it still needs improvement. So if you're really good at graphic design, let me know. I would love to have a couple of pretty thumbnails and stuff. But remember, stay curious, and we'll see you next week on the Lofty Lender.